Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 265 today. Uh, it's been a long journey for Weekend Investing Daily Bytes. We started last year and I think we missed only very few days of shooting this. But yeah, very exciting and good to engage with a lot of people. So how momentum catches unexpected winners is the highlight for the day, and I'll show you how one of our strategies has done that. First, a look at the market. So, market again continuing the upward trend that started many days earlier. Many people were not expecting this when markets were near 15,000, 15,200. Nobody was expecting that within a month or within 3 weeks we'll be at 16,600. So that itself shows the vagaries of the market, how unpredictable markets are, how most people are not able to call the markets, how most of the forecasts fall flat on the ground, and hence, in my view at least, there's not much point in trying to forecast things. The market tells you when to buy, it gives you the direction, use that. If you are following momentum, etc., if you are doing some other style of investing, then don't worry about the market. I mean, if you're finding, suppose, value, then you buy value and you just sit on it whenever the market will give you rewards. That's another way of doing that. So in today's market, the banking sector did very well. Some of the results have started to come, and IndusInd Bank showed the way for private banks. PSU banks also went up 1.6%, public sector enterprise, and a lot of good results and expectations from infrastructure and engineering companies, engineering good companies. Consumption stocks also moving up, commodity stocks also moving up, metals have moved up a bit. So it seems to be a very nice rally. The major sort of pivotal point may be the 27th July Fed meet, where it is still expected 75 bips of increase, but I think there is expectation of 100 bips also. I think India market is pretty much now at least having discounted all this, and unless there is now a fresh some result based disappointment or some fresh wave of selling due to some other reason, I think we are in good stead. In terms of Nifty, we are just about maybe 10 to 12% below the top. So if we look at the last so many falls in the market in the last 20 years, 10 to 12% is virtually, not really a fall also, you can say. The deep falls have been 35%, 65%, 40%. Those kind of falls have been the major ones. Now we are pretty sitting quite pretty, I think, vis-a-vis the rest of the world, and hopefully this can continue. Pharma had a small correction during the day, but more or less everything else remained largely green. And you can see for the last 1 week itself, IT stocks have come back dramatically, almost plus 7%. PSU banks have also come back plus 6.5%. Private banks have also come up 5%. So nice greens on weekly and monthly charts. In terms of sectoral indices, Nifty closed 0.5% up. CNX 200 was up 0.75%, and so was CNX 500. Small cap index also up 0.8%. Mid and small cap index up 1%, and Nifty Next 50 really running hard, plus 1.47%. So Nifty Next 50 actually is a very good, it's better than Nifty in the sense that there is more alpha here, but it is also much better than the other indices which have mid and small caps. So in terms of depth and quality of stocks, definitely there. So Nifty Next 50 is a very sort of a sweet spot, I would say, in the top 500 universe for me. And our strategy, which is based on Nifty Next 50, is our outperformer for the last 1 year and for the last 6 months, etc. And I'll talk more about that. MI-ATH2 gained 2.5% today. NNF10 was up 1.6%. MI-20, MI-30 up more than 1%. MI-EverGreen is up 0.8%, and others were up between 0.5% and 0.29%. MI-25 incidentally was down minus 0.14%. Heatmap for the day, Reliance was a bit sluggish today, but other than that, Asian Paints was picking up, Tata Consumer picked up, Grasim and Hindalco were doing well, Bajaj Twins doing very well, plus 3% on Bajaj Finance and plus 2% on Bajaj Finserv. Kotak Bank was down 1.5%. So quite a mixed bag day, but TCS and Infosys pulling along, ITC also peaking above 300, with the chairman saying that there is a potential ITC hotel demerger. A lot of people are getting very excited about it. Levers almost flat. Bharti Airtel also moving up a bit, and Asian Paints, as I mentioned, going up. In terms of the top 500 stocks, Aegis Logistics up 14%, Tata Com after good results up 10%, CG Power up 10%, Karur Vaisya and Kajaria Ceramic up nearly 8%. On the downside, Gland Pharma down minus 5%, Aptus Value minus 4%, SIS, MRPL and Thyrocare down about 3%. Crude has again started to come off from 107 to 102 odd on Brent. So again, there has been pressure on crude related stocks. So now we are talking about this how momentum is identifying winners. So Adani Enterprise was not even in Nifty Next 50 till as recently as April 21. So when it entered the Nifty Junior, the Nifty Next 50 index, we obviously in our portfolio of NNF10, where this subset is the Nifty Junior, or which is also called the Nifty Next 50, we had to take care of stocks that are coming in. So we when we ranked the stocks as per our strategy on 1st April, we had to buy Adani Enterprise. So by virtue of having a strategy where you are not biased against any group, against any company, just because there is a lot of talk about it, you sometimes hit really good winners. And this is what happened with Adani Enterprise in NNF10 for us. We entered somewhere around, we entered in April 21, and I think I should have some, we entered somewhere around 1200 odd, April 21, and then of course it has just gone up, and currently it is near 2500. So what you can see is the 140% type of gain we've already got on it. And now if it moves to Nifty, and there is talk that there is Adani Enterprise will move to Nifty 50, again we'll have to get out of it, because our subset is Nifty Next 50 for this particular product. So we may have to bid farewell, although it is doing very well for us. So this is how rule-based investing works. You are working as per certain rules, and you don't sort of take ad hoc decisions about those rules, that I'll include this stock this time, or I'll not include this stock, or somebody is saying something about this stock, so let me not include it. I'm worried about it's gone up 300%, so it can crash tomorrow, so I should exclude it, or I should exit that. So those kind of things don't happen in structured strategy. So you are going as per a tried and tested plan. Yes, sometimes that may fail. Sometimes your sixth sense may work better than the plan, but that's okay. I mean, over a period of time, if you have 10 such events where the strategy made gains in 7 times and lost 3 times, and you could have done better in those 3 times, that's okay. So you need to basically train your mind not to interfere with what strategy you are following. I mean, that's the sort of bottom line here, that once you have decided to follow a strategy, then the noise that is there in the brain to continuously pick into that strategy or change it or revise it, that is detrimental. So what this is doing is that the stocks are letting itself get discovered by you. so April 21, we had no clue, whether Adani Enterprise should be bought or not. But the exchange put it into the subset of Nifty Next 50, and then when the process was run on Nifty Next 50 stocks, Adani Enterprise was there in the top 10. So we had to pick that. So you have to let stocks tell you whether they should be bought or they should be sold. That is the sort of thesis that we follow. So as you can see, despite the some corrections in the stock and so on and so forth, it's been a reasonably smooth rally, and few such stocks every few years will smoothen out all the small losses or other disappointments that you may have in your portfolio. So you must have confidence that strategy which has worked in the past, strategy that has done well, will continue to outperform, or to at least continue to find such stories there. And you can see here, this is again the same chart compared to Nifty Junior and NSE 50. It is consistently outperforming the indices, and every month the profits is getting redistributed. So your exposure to any one stock also keeps reducing. So I've also given the description of the link in the description for NNF10, if any of you may be interested in looking at that strategy. So very nice tweet from Charlie Bilelo today. This is very sort of, it hits you hard, the reality. 2 years ago, 30-year mortgage rate was 2.9%, and the average home price was near $300,000. Now, within 2 years, the mortgage rates have almost doubled, near 6%, and the average house price has gone up almost 30%. So usually, typically 20% down payment is made, and the rest you pay in EMIs. So the EMIs have gone up from $978 to more than double, to $1,933. Just imagine the kind of sort of degrowth of new home sales that will happen. In the US, there is a very nice facility most people have when the rates are down, to lock in those rates for very long periods. We don't have that in India or in many other countries. So those who are smart enough would have locked in long-term rates in the US. But any incremental house sales, and most 90% plus house sales happen on mortgage only. So this is going to have a very cascading impact on new home sales, and that, of course, once the housing sector gets impacted, as we saw in 2008, everything else comes crashing down. So from this perspective, the global scenario is definitely very, very challenging, and that kind of a headwind can also come and hurt India in some ways. So from this perspective, we are not sitting on a very nice wicket going forward. This needs to resolve in some way. I don't know how this can be resolved, but as of now, inflation continues to rage very high in the entire Western world, and as importers of things from rest of the world, we will import inflation also. So the Atmanirbhar sort of theme that we have in our country, it's better if we can sort of implement that as soon as we can, and reduce our dependence on overseas imports. Another sort of tweet on Bitcoin was on the crazy drop that have been seen, and 75% sale of Bitcoin has been done by Elon Musk in its Tesla company, and Bitcoin already dropped something like 70-75%, and then after that drop, you sold 75% of your holding, so you actually left with only 6% odd of your peak holding. So from that perspective, I think these are setting very poor examples of how investments should be done or should be retained. If you had to sell, you should have sold maybe 20% lower from the top. But again, this is a classical mistake most investors will make, have always made, and will keep making. is that to keep waiting for 60, 70, 80% drop to happen and then sell off their most of the holding. If you take a 80% hit, you require hundreds of percent of gain, 400-500% gain to come back to the same point. So you need to worry about drawdowns very early and get out of the stock or the asset that is falling very badly. So this is all I had in today's daily bite. Thank you so much for watching, and do give it a like if you think the content is worth a like, and share it with your friends and family. Thank you. Bye.